All right, morning everyone. We get going. Down in there, Brody. All right. Last night you can see we had a bit of a sideways session. Looks like we had some action, but it was really just the spread between highs and lows were so small it just makes it look looks like something actually happened in the States. You can see there we were basically flatline on all indexes. Mix between sectors and just really kind of consolidating some of the previous 5 or 6 days of gains. Below average volume is definitely the big part of that. We saw the same thing here, and I think that we may continue to see that until we either see a capitulation move to the upside or we see some sort of correction. Existing home sales fell at lower than expected monthly rate in the States as well. Didn't really do anything to markets, and we're going to start to finally see that flow through to of the governmental data that we didn't get to see during the shutdown. So today, non-farm payroll is one of the big things, obviously. All right, in Asia we saw a bit of mixed action. Hang Seng and Shanghai down a little bit, and then we saw the rest of the markets kind of up across the board. We really saw the Australian market, which was boosted by first half numbers out of BHP Billiton, a really strong production update that came out. Even better, I think, than Rio Tinto's numbers the other day. So you saw that Billiton's was up over 2.5% in Oz, and I think really kind of drove the index. We also saw home prices in China's 4 major cities that rose the most since January 2011 last month, and obviously that's raised some sort of concerns there for more curbs on the property market and potential new legislation put in against property speculation. So that's probably one of the reasons why we saw the Chinese market down a little bit. All right, yesterday we had first half numbers out of Mr. Price. We saw the headline earnings per share, which was guided 20 to 24% higher. From what we saw yesterday, some of the expectations from some of the banks were looking for closer to 12 to 14, I think. So this is a nice beat there. You saw the share really trading up after the numbers came out. I think that it has been running into this number already because markets were really expecting this to be a beat. It did obviously impress. So we didn't get a huge explosion after the number yesterday or after the trading statement, but we did get a nice push to the upside. I think Investec did have them kind of up, sort of up at this level, close to 22%. But they're only expecting about 10% to the full year, so I think there's really some opportunity to really beat to the upside on Mr. Price. Also last night we had Texas Instruments, which are out in the States. Nice beat on EPS by 3 cents, came in line on the revenue number. Then we had the quarter one production update out of Billiton, which we talked about a second ago. Iron ore, nice beat there. Copper, I would consider that a huge beat. Petroleum, a nice beat there by about 2.5 million barrels of oil or oil equivalents. And we saw Met coal number, which was a beat. Energy coal, which also is a beat. I mean, and they're raising their iron ore forecast to 212 million tons from 207. So, I mean, that's obviously the reason why we saw such an explosion out of Billiton's and Oz last night. It really just was a monster beat in terms of numbers and really impressive. I think Billiton's obviously see a big push up this morning on the back of that. All right, we saw Pick and Pay also was out this morning with first half numbers. Saw quite a miss on the EPS number and the revenue number, and then the divvy per share number also was quite a big miss. So I think that's going to be a serious disappointment in my mind for for the markets. We'll have to see how we react to that. I know that obviously there's a lot of restructuring and things like that that have gone on there. I think they've kind of laid off a lot of employees, etc. So I don't know how much of this is priced in, but we'll have to see how the market takes it. Then later today we've got before the bell in the States we've got DuPont and UTX, United Technologies, and then we've got EMC and Amgen as well after the bell. All right. All right, 8 o'clock this morning we had Swiss watch exports. Total watch exports up 8.5% year on year. Hong Kong up 10, U.S. up 17.4, China down 3, Germany up 8.7, Japan up 9.2, Italy down 1.4. Not 100% sure what the expectations were there, but I think, if I'm not mistaken, those are significantly better numbers than they were last month on those export numbers. So I think we'll probably be looking pretty good this morning on Richemont. We're also looking for leading indicator numbers out of SA here at 9 o'clock this morning, and then the rest of the data is out of the States today. Big day for data in the States. Actually, we've got non-farm payrolls expected 180,000. We've got the unemployment rate. We've got net long-term TLC flows. We've got construction spending, and then we've got the Richmond Fed numbers to round it off at 4 o'clock. All right, let's jump into the maps. Okay, the first thing I want to have a look at here is light sweet crude. Have a look at the oil price here. Actually, really at a significant point right now in the oil markets. You can see here right at around $99. We're coming into major support from really where we broke out from, and also the 200-day moving average, which we're coming back to test. What I think is so significant about this, it says a lot more than just what's happening price-wise. We need to look at this in terms of one of two things. Is demand really driving the price at the moment for the oil price? Is it driving the price down and it's starting to tell us something about the economy? Or is it simply that alternatives and the massive oil exploration that's kind of been happening in the States over the last year are finally starting to make an impact to the bottom line, to the oil price, and we're going to start to see enough supply to really start to weigh the price down? Obviously, the latter is exceptionally bullish for equity markets. It could be one of the reasons why we've seen such outsized performance in U.S. equity markets and global equity markets as of late, is because the oil price is, getting ready to fall significantly, and that'll be an enormous boost for the global economy going forward, or it's either telling us that demand's not there, and we need to start to pair expectations about what's going to happen, and the stock market's probably close to following. So I think that this is a really important thing to kind of keep an eye on. We need to kind of establish which it is, and I think we'll be able to figure this out if the oil price continues to fall and equity markets continue to move higher. We'll know that it was a kind of second of those scenarios, and I think you'll really be able to kind of make the decision that markets are starting to make a bullish call, that energy prices are falling, and that's going to be a boost to global demand. Okay, after that really long-winded explanation, let's have a look at Bidvest here. You can see Bidvest really making a huge rising triangle here. I mean, the pullbacks just have gotten smaller and smaller and smaller off of this level up here around, call it 262. We finally popped through on a closing basis nicely there at 264.50 yesterday. I mean, this is a full-on breakout if you ask me. This is a shorter term version of some of the things we've seen in some of these other stocks that have had the longer term charts like this. But I mean, it's really a massive triangle. I think we can move significantly higher off this. It could move $20 quite quickly. So watch for Bidvest in the next few sessions. Could have some serious legs. All right, let's look at CFR here. If you see in CFR, really making a bit of a flag. flag pattern here, or yeah, maybe even a bit of a descending triangle that we're pushing higher into trendline resistance at the moment. If we shorten this up a little bit, we can get a slightly better gauge, and we can draw this line a little bit higher. We basically came up, tested it, and failed it yesterday. Right around 102 is where we're gonna put that level. If we can break above 102 in CFR, I really think there's definitely some significant upside there. Over the next few sessions. How many of the patterns are starting to look exactly like this? So this is, and they're all kind of breaking out and showing legs after that. So just keep an eye on it. All right, CFR, we're going to look at this level. I'm sorry, Kumba, we're going to look at this level 429 that we saw yesterday. We talked about yesterday. We did get below it intraday for actually kind of the second half of the day. We managed to hold it on a closing basis. This is really important. I think this is a monster level. If we don't drop 429 over the next session or two, it actually might be worth a little bit of a nibble. And there's a lot of people short of this thing. You got to remember that. If it does drop 429 the next day or two, it can hold below it and start to push away from it. I think it's very bearish, and I think it can go significantly lower. So just keep an eye on that level. It's going to be a big one to watch over the next couple of days to see for the next month or so. All right, we'll look at Vodacom here. Vodacom kind of dropping out of what's definitely was a big support level here. This is really looking like a bit of a bear flag or descending triangle, whatever you want to call it here, but a bearish formation that we've dropped out the bottom of here below about 1320. And I really think, let's back this out and let's go out to a 2-year here. One of the levels that we had looked at, I remember, going back almost a year and a half of looking at these levels every single day on Vodacom, and this was one of the major levels, was this 112 level. The 112, you can see here, we had a double top, and then we pulled back and we broke up nicely through it to take us to those higher levels. We came down, literally touched it on the wick here. And then we also, when we made pullbacks, we bottomed off of it here. We came down, touched it there. 112 is a big level. So not only did we drop out of that triangle pattern, but we also dropped support at 112. So in my mind, the fact that we're below 112 in Vodacom, very bearish. I think that we can probably continue to go a little bit lower. Out of this pattern, we would probably be looking for about $3 a downside, which is not that significant, only taking us down to about 110. But bottom line is, things still looking quite bearish on the Vodacom chart, and we'll have to see if we can find some support anytime soon. All right. Let's look at Discovery. Old Johnny put me onto this one yesterday. It's a nice looking potential for a bit of an inverse head and shoulder, which is really, right where we broke down from. We came back up and tested it on this left shoulder. It's the level's at about $83. And I think, this to me is looking nice to potentially break out through that level. If we get above 83, I think we could have quite a quick move up closer to maybe 87 to 88, and maybe retrace, into these levels here. So we'll see if that happens today. Watch 83. That could be a bit of a nice breakout play to the upside. And then SPAR. The last one I'm going to show here is just SPAR, right here at around 127. Really kind of topping out at the top end of the range, call it 126.70. I'd just draw this as a bit of a range trade. We touched it so many times on either side, and we finally broke out to the upside yesterday. And really it's about a 5 rand breakout, about a 5 rand consolidation. So we kind of maybe look for the same sort of breakout to the upside, which could take us to new highs, to retest the recent or all-time highs at $132 in SPAR. And that's it for today, guys. Thanks a lot.